Hello and welcome to the trade setup. In this video, we are looking at Super Micro Computer. It is time for another update. And on this chart, it seems we have managed to break out of our smaller time frame resistance levels that would have indicated direct continuation to lower prices within this structure. This has just become a very unlikely outcome. It seems most probable that at this point, at least this as an internal structure has been completed. But what does this mean for the larger time frame? Does it mean we have bottomed? Does it mean that we are looking for new all-time highs? Well, it depends, because any chart has the chance at any point to create even unlikely patterns, but you would have to be aware of the levels that need to be broken for this to become a more probable outcome. So today we will of course take a look at these levels, at the structure that we would like to see built within this movement, within this rally we have so far formed, for even a confirmation that the bottom would be in place. And of course we will be looking at the levels that need to hold, the levels that we cannot break to still be able to build an initial confirmation. But before we do that, let's go through the larger time frame to provide the context for this chart. So, we have been looking at this structure in many different ways. The end story is that the overall count for the larger time frame is not too important right now. I could consider this to work out as a large leading diagonal. I could consider this to be, let's say, an A, B, C pattern. I could consider the wave 3 to still be ongoing. It doesn't really matter because currently the pattern that is in charge is within a smaller time frame. It's this orange scenario that would expect us to follow through into new lows within this region. So here on the daily, we see that we have an A wave down, we have a B wave up, and the C wave can very easily take us directly to lower prices. We have actually been tracking an impulse in this structure, and the green interpretation is rather looking for a potential reset of this wave B, but nothing too bullish to be honest. Now, of course, it can become more likely if we happen to break certain levels of resistance, but so far, I would consider that even this wave 3 would likely still be ongoing, because in the internal structure I am tracking in this area, this latest low would have only been the bottom of this internal wave 3. We would actually require a wave 4 and a wave 5 before having even this as a larger wave 3 of the wave C complete, and even then we would be looking still for the next resistance levels for a wave 4 and a wave 5 to take us to even lower prices. Now let's do a small recap of what we have been tracking internally in the previous videos. We won't do the whole story because we are past this at this point, but we have been looking at two scenarios to extend us to lower prices. We have been primarily tracking this as a potential wave 4 triangle. We have highlighted very clearly the trend lines that have been broken before actually getting this massive drop to lower prices. Anyone who would have used those trend lines and the internal support levels for an indication of a failure to extend directly higher within what we had here in this ABC pattern would have been prepared for this outcome. But nonetheless, we have extended to lower prices. It seems likely at this point that this has rather been within a wave 4 triangle that ended probably in the latest extension here. And really neither the white or the blue interpretation succeeded in forming that additional ideal low to lower prices, right? We had internal levels of resistance for both interpretations, white and blue, and we highlighted that if we get a sustained break above the 61.8% retracement in blue, the $26.8 level, which is now done with, we would need to assume that the wave 5 would have bottomed, that the larger wave 3 would have completed already, and that this would instead be the wave 4 correction, even in the bearish interpretation. This is in fact what I consider to be the most likely outcome at this point, and we actually provided some updates even in the previous video. We provided an additional potential triangle. We highlighted some trend lines that were extremely important and that were highlighting as we were heading closer and closer to the apex that we would likely see a strong move in one direction or the other. This is actually quite common. We explained in the video, or possibly in the video before we had the massive drop, why strong movements are to be expected as the price gets compressed into a smaller and smaller structure. Nonetheless, we have broken the levels of resistance, we have broken above the trend line, and we see the result. We see this massive extension to higher prices. This means that we have failed to actually extend even lower within this as wave 5. This means the sentiment shifted. It means that the bottom is in place and we are now looking for this to be potentially a larger wave 4 correction. This doesn't invalidate or affect by any means the overall larger orange structure. We would still consider this to have been a wave 4, part of an internal wave 3 to the downside in this area. We would still be looking for a larger wave 4 correction, a wave 5, and even then, only the internal wave 3 of the larger wave C would be complete. Even then, we would still expect even further lows, and all of this remains applicable as long as we do not get a sustained break above $33.8. This level, the 50% retracement, is extremely important. That is why we provided it in the previous video to be prepared for the case of a breakout from our internal levels of resistance, because this structure still hasn't come out of the woods yet, still is under a significant threat that it would see even further extensions. We even have structural resistance at these levels. We have previously struggled within these movements, within this triangle, to actually get past this level that is currently the 50% retracement. Now, let's move into the smaller time frame. Let's track this internal pattern. Firstly, we will cover the scenario where this would be an actual wave 4. And primarily, I would like to track the idea of an ABC structure. This can be primarily tracked within the orange interpretation, let's say. We would track within this wave C an internal 5-wave pattern, of course, and so far I believe we would still be within the overall wave 3. I would expect still continuation to higher prices within this wave C in orange. There is really no strong indication that even the wave 3 itself would have formed a top just yet, and I would like to look for the wave 4 correction and one more high before actually considering the count to be full within this pattern. Now, this, of course, doesn't have to be the only possible interpretation. There are actually a few options, some of which would allow even a stronger breakout. I mentioned in the beginning of the video that we will be providing the structure that needs to form to provide an initial confirmation that a bottom may instead be in place. So, this would be the idea of a leading diagonal where this would have been a wave 1 up instead, a wave 2 would have been down here, and now we would be forming the wave 3 to the upside. We would track then a wave 4 and a wave 5 to complete, potentially within something like the green interpretation, an initial 5-wave pattern. Now, why is this important? In Elliott Wave theory, after we get an initial 5-wave move, we expect a 3-wave correction and then trend continuation within at least another 5-wave move to the upside with high probabilities. Why is that? Because within the known structures, the known waves of the theory, this initial 5-wave move to the upside has two options. It could be a wave 1, in which case we would expect to build a larger 5-wave pattern, or it could be a wave A. A wave that would be part of at least a larger ABC structure. So within any structure where we get an initial 5-wave move to the upside, the likely portion, the likely outcome would be to get at least an initial correction and then trend continuation within at least another 5-wave move to the upside. Because in this idea, the wave 3 must be always a 5-wave pattern, in fact an impulse even, and the wave C is also a 5-wave pattern. Now, the wave C can be an impulse, but it can also be an ending diagonal. So this is the likely portion of any confirmation. This is what we are seeking when we are looking for an opportunity, and this is what we want to see form even within this structure. Now, within both of these patterns, we would actually expect to actually complete the structure that we have internally. We would then expect a larger correction and then one more high. And depending on the particular developments within this internal structure and on how the follow-up wave 4 develops, we would have more evidence that it would be more likely to be one structure, one scenario, or the other. Because, for example, in the orange interpretation, I am looking for this wave 3 to actually build only a 3-wave pattern. In the case of the wave 3 in green, I am looking for this internal wave to build a 5-wave pattern, because the wave 3 in green is part of a leading diagonal where this would have been a wave A up, a B wave down here, and then within the wave C, as I mentioned just a moment ago, it must be a 5-wave pattern instead. So depending on how this internal structure develops and how this follow-up correction develops, we would have a better idea of what type of pattern this really is. At this point, I cannot provide you this information because it is still very much in development. So far, the orange scenario would be in charge if we are to form a more substantial top, but if we form an internal wave 4 and a wave 5, we would have to consider the green interpretation to be more likely. So at this point, we aren't necessarily looking for an actual trade setup, we are tracking the structure. We want to see this further develop, because unless we manage to follow through within the green interpretation, there will be no strong indication that the structure will succeed in getting through the area of resistance in orange, in getting through the 50% retracement, which is at $33.8. In fact, the ideal target for a wave 4 in orange is the 38.2% retracement at $29.7, which is just within reach, which would be likely to be the top if we are to start the wave 4 correction right now, for example. But of course, let's watch the developments and let's watch the levels of support that would still allow continuation to higher prices. So in orange, I would have to consider the area of support for a wave 4 within the area of an ending diagonal in a wave C, right, in orange. So we can watch for support as low as $24.2, basically, the 61.8% retracement. For the wave 3 in green, well, I would probably prefer to track an internal structure that would extend even higher. I would prefer to track here something like a 1, 2, 3, 4, and 5. Within this wave 3 in orange, I could see something like an A, B, C pattern that really doesn't even need any further extensions for a top to be in place. In the case of the green scenario, I would actually once again prefer to see one more extension after a larger wave 4 correction internally in this wave C. Now, we won't also add that on the chart because it will add a lot of clutter, but we can safely track the support zone between, let's say, $27. Now, all of this is based on the current high within this structure, but down to $24.9. Unless we manage to form an internal wave 4 and a wave 5, we would have to expect the orange scenario to be much more likely. And of course, ultimately the structure will still be able to have a breakout even if it doesn't build the 5-wave pattern that we have in green. But there would be no edge for us here. There would be no advantage that we inherently carry based on the market sentiment that we know there is a high probability to get into the area of support, to buy with favorable risk-reward ratio, to actually have the structure succeed in forming the next high. So while you may find edges from other strategies, there would be no strong indication from an Elliott wave theory perspective unless we manage to build the initial 5-wave pattern. So let's do a short recap. On this chart, the pressure still remains down. It is much more likely at this point that this orange structure will continue to extend to lower prices. For this to actually get a signal that it is not going to happen, we would first like to see a confirmation, possibly. internally, build the initial 5-year move to the upside. We would also like to break the $33.8 level, and the order in which this happens doesn't really matter at this point because they are more separate signals than it may be initially obvious. Then, within a smaller structure, we are finding it likely that it will still extend within at least one more high, but if we get a sustained break below $24.2, it would rather be a pretty great warning signal that this overall structure has actually likely already formed a top, that we might not get extensions in fact, and that we would need to be prepared for a broader failure and direct extensions to lower prices, possibly within even more bearish scenarios where this wave 5 might in fact be able to extend. And for now, these are the levels, this is the trade setup. I hope you enjoyed the video, and if you did, don't forget to leave a like, subscribe, and if you enjoy our content and want to support us directly, check out our channel membership. And as a thank you for any of these actions, I would like to invite you to sign up to our channel newsletter, where you get access to our monthly top picks where we identify for you high quality structures. Other than that, let me know what else you would like me to cover, and I'll do my best to do that in the days ahead. And until then, I hope you have a nice day, and I hope to see you in the next video. Bye bye.